What is up, everybody? Welcome back to another episode of the Run Your Mouth podcast. And we got a big one today because when the market starts to panic over Bitcoin going up, Bitcoin coming down, you got to call up the Bitcoin evangelist himself, letting you know that this is your opportunity to buy more, grab your balls, mortgage.
Buy.
If there's a dip, that means buy. If it dips more, buy even more. Guy, it's a pleasure to have you on the show. It's been since Porch Store. How you been, bud?
Shit, it has been a minute. I'm doing pretty good. How are you doing, dude?
Always a pleasure. If you're looking for something to do this Valentine's Day, I do have a gig up at the Shell, and there's nothing women love more than being brought to obscure libertarian hangouts to meet other autists that probably shouldn't have guns on them while they're drunk. So I recommend coming to the Shell for my show. Guy, you got anything you want to plug up top?
Wait, what's the Shell? It's not anywhere near me, is it?
No, it's up in New Hampshire, the Free State guys. They got a nice little libertarian clubhouse, and I play there every year. It's always a good time.
Gotcha. No, just the show right now. I'm not quite yet to really start broadcasting out my other project, but soon, probably in a month or two.
All right, so let's start with this. You know, last week was a bit of a spooky week. We're already starting to rebound a little bit. And I know that you don't like to actively trade your Bitcoin. To you, it's currency, and that you should just view it as money. For those who have not drinking as much of the Kool-Aid as you have, and like to have a bit of an understanding as to why the asset's going all the way up or why it's coming all the way down, do you have any insights into what was going on behind the scenes that drove the price? I think it was at 1.120 or something like that. And then why it flash crashed basically down to the 60 range. What was pushing it up, and what got it to come down? What's actually going on here?
Okay, so I'll give you a couple of like really zoomed out things that I think have happened that are kind of painting the picture for what this quote unquote cycle looks like and why. Or at least these are the things that I believe are most important. Is one, the really big thing is that I think we've entered a stage where Bitcoin isn't the shiny new thing anymore. And so it essentially won't, I don't think it will have a powerfully sustained hype cycle again until it's actually disrupting an industry. You know, the internet went through a series of major disruptions that staged out, and kind of like, you can almost look at it like 10-year sections of like the internet development. And Bitcoin has touched into the sphere of literally a ton of them, but it's stayed in like kind of the 1%, 2% range of the various markets. And I think for a long time, the technology hasn't actually been there. And one of the things I've noticed in every hype cycle that we have is it's kind of in the bear market and towards the end of the bear market, when we start to like kind of gradually climb out, that we finally start to see the new tools and the new applications and the venture into new markets start to kind of come to fruition. And we kind of haven't had that yet. We were kind of on a longer timeline to a lot of the things. It's not been until literally like the last 3 months that a lot of things that I've noticed and seen essentially the next era or the next chapter of like major infrastructure build out finally actually be realized, while the main driver was really just kind of like, oh, it entered the political sphere. Trump was talking about it, and politicians, and Bitcoin reserves and all this bullshit. And it's like, okay, like that's great and everything, but I think it really just led to a huge leveraging that didn't have really much sustainability at all, because you had like Bitcoin treasury companies that were essentially taking out loans against stock value to buy Bitcoin, and this was like kind of a buzz for a little while, and that's like, that shit's not sustainable, that's not really going to work in some foundational means of making a long-term investment. And leverage is exactly the sort of thing that you have to unravel if the thing goes 30% in the wrong direction, which is how you turn 20 or 25% dip into a 50% dip, because you have to unravel a bunch of leverage that you couldn't afford. And so I think that contributed a lot. And more importantly,
can I ask you a question on that?
Yeah.
All right. So what I'm hearing is a lot of why Bitcoin got jacked all the way up to 120 was hype and leverage, that people are
Hmm.
excited for the asset, they're excited for the storylines, and so they're borrowing money, and everything's kind of just up at the moment. And so people, I guess there's too much liquidity in the system, or for some reason, something's jacking prices, and that's finding its way into Bitcoin. But just to
Hmm.
give some specifics, because I'm also hearing a bit of a bear story for Bitcoin here, and that there is no actual application yet, and that it's all hype of new industries that it could disrupt. So, can we actually give some specifics to what you think the real world applications are that are coming our way that would actually, I guess, boost Bitcoin's usage and value?
I would frame it actually as the opposite. It's not that there's not any use cases, it's that most of them require a feedback loop. It's a kind of a chicken and egg problem. Is there a lot of very awesome applications of Bitcoin actually, but you have to have Bitcoin to use them. So if and one of our biggest problems is still onboarding Bitcoin into Bitcoin. And so like if you're selling some sort of a product or a network or something or some sort of a use case that only Bitcoin can do, then you are literally limited to people who already have Bitcoin in their hands as your market. And it's not until, especially if it's something like a network effect, or it relies on a network effect, something like Nostr or something, is that only until it reaches this potential threshold of 3%, 5%, where the network is actually large enough to sustain itself and be intriguing for its own use case. You know, like Facebook is useless if your friends aren't on it. So if only one friend is on it, it's worth whatever it's worth to hang out or talk to that one friend. And so in the same sense is that like you have to reach a threshold to actually kick off momentum that encourages people to get Bitcoin in order to use the network or the tool or the infrastructure. So it's kind of like trapped
Okay, so
inside
then
the
let's
onboarding,
let's
this
uh
onboarding section.
let's delve into your imagination here.
Okay.
And let's just imagine, let's go with, you know what, for the sake of economic conversations, island examples are always good, right? So let's
Mhm.
imagine that we're out on Bitcoin Island and there's 10,000 people there and everyone's using Bitcoin. So what is the Facebook like network that all of a sudden Bitcoin's being used? Like, so what does that mean? All the just the financial transactions are happening in Bitcoin. So now it's actually used as a currency, and so that gives it value because it's got redeemability, that I'm walking into any store and they're accepting Bitcoin. But what are like what are the disruptive or kind of value, uh what's the value pitch here? Like, if go with your Facebook example, if everyone's using the Bitcoin, we're all on the island, what does that do to boost the value?
Okay. So the important thing to remember is that money touches literally every market. And that one of the biggest reasons why you can't do a lot of things, or you are stuck on a platform, or you cannot control your information, is more often controlled and owned by the platform. Your network is owned by the platform, is because of the flow of capital, the potential and the capacity to actually monetize these things cannot be distributed. And increasingly, we also have a a massive and growing, like every single year it grows in percentage, fraud and chargeback problem. And the consequence of that charge, the fix for the chargeback and fraud industry that is continually growing, is to KYC everything. That's why you're having to scan your face and take a picture with your freaking ID to get social media access, and they're doing it to Discord and all of this stuff. Like, we're actually increasing frictions, and then you do three captchas on top of it. And what's funny is that none of these things actually prove that you're human anymore, because the AIs can do them better now. You can easily fake somebody's face. You can easily fake somebody's voice, and you can build a script without even breaking. I could do this right now in the next 15 minutes to just have an AI bot just go through and do captchas for me. I've seen, I posted a video not too long ago of AI doing exactly that. So all of these frictions and this resistance is going to get worse and worse and worse. And when you actually, I think what it means is we actually lose the open internet when it comes to non-push payments, when it comes to credit payments, because you can't trust a payment if you don't know how to prove someone is human. And the only way to prove someone is human is to have a national ID database that's run by the government of who official humans are, and then remove and revoke all other capacity and access unless you're in those walled gardens. This is why they're limiting API access. This is why social media is starting to charge for access. And I think all this just gets worse. I think the only way we actually get the open internet again or back is if you use open money that can't be reversed in payment. And the big use case, I think probably one of the things that a lot of people are sleeping on that has a huge potential when it comes to maybe in the short to medium term is AI. Is you're not like, what does a bot use to pay for things? I have a Claude bot that, you know, you've seen this kind of rave of like getting your own AI agent. This thing is really dope. You have to, like, security concerns are horrible. And like I've done an enormous amount of work to like kind of isolate this thing. It has all its own accounts and everything like that. But it manages my calendar. It manages the only reason I was here. Like it manages my reminders and all of that stuff. It's also like my idea dump bucket. But immediately, like Matt Odell, a friend, another guy in the Bitcoin space, actually has one just for fun with a little bit of sats, and it's trading on LN markets for him. And like, I don't think that's like a huge use case, but it's an important thing to realize that this is programmable money with development kits that you can just give an AI agent to reach out to pay to other AI agents. Like I just gave mine access to PPQ, which is ppq.ai. It's a service built by a Bitcoiner that literally runs an entire stack of APIs to basically every model out there that you can think of that is basically accessible with an API. And so it's like Claude, ChatGPT, Gemini, Nano Banana, there's LTX, there's like every vision and AI and LLM and image and video model, like all of them. Like it's just this huge thing. And he takes Lightning. So I can literally give my agent a budget with Lightning, and he can just go out and just pay for stuff and do stuff. So I literally, one of the first things I did is like, okay, you have access to PPQ now. We need an icon, because in Telegram, my conversation mechanism for my bot, I was like, you need an icon. So why don't you just go generate like 30 icons, try to spend, you know, under $1 on the APIs, and generate a whole bunch of icons with a bunch of different themes or whatever. And let's just see and play around with it for a little. We did a couple of different iterations. It made its own icon and stuff. And like, so now I can give it tasks, and it can go pay for services or other models or other agents to do parts of the tasks that it's not optimized for, or that we don't have the infrastructure for.
You're saying the only way that we can give the world to the AI overlords is if we build them a currency so that they don't need human interaction to approve payments, and they're going to need a currency. All right. So let me ask him more.
Meaning that the only way that we can actually sustain an open network where money can move at the speed that our machines will be doing things will be with money that sends instant payments and does so irreversibly. Because as soon as you do a sequence of credit, think about it. If you're doing like your agent does a transaction, that agent does a transaction, that agent does a transaction, and you do this, you chain through like 100 things, and then 19 days later, the first one charges back.
Okay, what happens? But I get it. So then you've potentially ruined the entire sequence of transactions. But
it's just cost just skyrockets because everybody has to pad it to deal with the fraud, and bots are where all the fraud is. So,
right. But I'm seeing a different issue here. So like the original, and I don't think you're making a pitch that undermines the initial pitch, but the initial pitch of Bitcoin is government stealing all of our money all the time through inflation. So let's have a harder monetary asset that's outside of the hands of government, that has a finite amount of value. And so therefore, you know that this is never going to be worth less than what you had purchased it for, and government can't steal from you through inflation. And then we're kind of jumping ahead in terms of what we're going to get to with kind of Bitcoin versus Bitcoin Cash. but the
Mm-hmm.
idea of it also being technologically disruptive, of being easier to use, so that
Yeah.
there's an incentive structure that people prefer to use this form of money to other forms of money. But
Yeah.
now what you're
Real
describing to
quick,
me,
just on
yes,
that point, what I just described was simply a technological advancement, or a way that the technology and the interaction with it, the tools themselves, can disrupt a type of industry, or have an explicit like on the ground use case from a utility perspective, whereas the other is a monetary value, which that one the other is actually a much bigger capacity, has a much bigger value. But I think onboarding in a short to medium term from a technological perspective happens more likely, or probably it can cascade faster when it comes to like an extremely valuable, like, immediate tool where somebody doesn't have to care about the like what the money is that they're using. They just want the tool to work.
but now
So
you're giving people kind of and maybe I'm just wrong here, but it sounds to me like you're
Mhm.
almost giving people a difficult choice here, which is, would you rather the product and services you engage with be cheaper, but when you send them money, you can't possibly get it back? And with Bitcoin, it's going to be a permanent transaction if you purchase something. So everything's going to be cheaper, but you're more at risk, I guess, for if you have a fraudulent transaction, versus if you're going through credit cards and other options that allow for a chargeback in the event of fraud. It's almost like you're purchasing a bit of an insurance policy, because that also means that there's transactional costs that it's almost like what lawyers have done to health insurance premiums in terms of suing doctors.
Mhm.
You're describing
Mhm.
like a similar thing for financial transactions, but just in terms of like market interest, would you rather spend more but be able to get back your money in terms of fraud? Or would you rather agree at the beginning of a transaction that that's an absolute transaction and then possibly be a victim of fraud?
I would say I actually had read, there was an article talking about it, that exact same thing not too long ago. And I would say that's a false dichotomy, is
Okay.
that you can easily create chargebacks and create credit on top of an irreversible money. You just introduce trust. You can't create irreversibility in something that only exists because of trust, where the payment is credit by default. You can always have credit on top of Bitcoin. You can always use a third party that does payments on your behalf and offers the service of a potential chargeback or a slow settlement, where when you make the payment, it's actually held in limbo, or it takes 5 days so that you have room to revoke. In fact, that's actually the only reason that the darknet markets actually survived. This has kind of been going on since the very beginning days of Bitcoin. They used an escrow where you put the money up front, and then the service itself was the one that would sign whether or not everything went through okay. And then if you got your drugs in the mail, you would then release it, and it would go to the other person. And if you didn't, you would complain to the trusted third party, the darknet market in this instance. And then everybody would submit their, I shipped it. No, you didn't. I didn't get shit in the mail. And then they would be basically the arbiter to send the money back if they were in fact scammed. So you can always introduce trust. The point I was making just about the idea of like AI as a tool and agents being able to spend money is that one that is happening incredibly fast and is happening at the rate of like APIs and stuff is going to have a much bigger problem. And the capacity to essentially, there's a potentially completely new area of economic activity that can likely only be sustainably served by something that is a digital direct payment money. And that's going to be a really interesting kind of wild card in the development of the next couple of years. And I actually want to go back one more time to because we never actually finished, if you want to, but the big picture overview of the
Up downs.
ups and downs of like where we are in the market, because I think there's two other really important factors as to what has happened in the past 2 years, so to speak. So one of those is that the 4-year cycle became obvious. And we have entered a period in Bitcoin also where the inflation schedule, the release of new Bitcoin, doesn't really matter anymore. because it's already the hardest money in the world. So it's the inflation rate is something like 1.5% or something like that. It's pretty strongly under gold at this point. And 1.5% flux in the amount of money in circulation is extremely minimal. You have 20% liquidity shifts, and those are the ones that are actually driving the market, right? Inflation doesn't really matter. Now, when a pattern in the market becomes like shockingly obvious, and the 4-year cycle for Bitcoin could not be more obvious. Like if you look on a log chart of Bitcoin's history, it's just like and in fact, it's like been perfect. 3 green, 1 big red. 3 green, 1 big red on the yearly chart. And it has done this like 5 times. Everybody was expecting that. As soon as a pattern is obvious and everybody is anticipating it, it breaks. It stops working. And I think that's what happened here. Everybody was expecting 2025, because every other time this has happened is going to be the big green candle, and they all leveraged to take as big advantage of it as they possibly could. And we started off with that great climb, and it got everybody all jazzed up about it. And when it didn't happen, when the year kind of ended flat, everybody's like, oh crap, I have to deleverage, or it starts to fall a little bit. And everybody who did it irresponsibly is now selling pressure. Everybody who thought it was going to go up suddenly turns into selling pressure, and they don't have a choice. They don't have a choice because there's time cost for all leverage positions, right? You're paying basically interest every day, or losing value in the position itself just because of time decay if it doesn't go in your direction. And I think that was a huge part of it, is the 4-year cycle of Bitcoin is over. We're entering kind of a new chapter because we're in traditional markets. We have institutional like adoption and slow growth. They're not in a hurry. They don't do anything in a hurry. They slowly bid up and build a position in the money. And I think that's exactly what they're doing. Then there's another big one. Is I read an article that I thought was one of the best ones to frame it, is that Bitcoin is having its silent IPO. It's not actually like a stock that IPO'd onto the market, but it does actually have an enormous amount of similarity in kind of the conditions and how it's been exposed to an enormous amount of liquidity in the last year and a half or so. All the ETFs got approved. We opened up it became part of retirement accounts and hedge fund conversations, and opened up in the traditional markets. And literally liquidity went from like $250 million a day to $3 to $4 billion a day, like a massive, massive new market. And everybody was like, oh, this is going to blow up. This is going to be huge. Bitcoin's going to just like skyrocket because of this. When what you actually see when a stock finally IPOs, like Facebook and Amazon and all these things that are hugely successful, actually for the first 12 to 18 months, you actually get flat or down more often than you get a huge rally. And there's a reason why, is because there's a lot of early investors who make large positions as it's clear in private, in OTC, as it's clear that this has a very strong potential, and they don't actually have the liquidity to get out when they get in. And I think this is kind of indicative of the 2017, 18 era. That was when kind of the first billionaires were ever talking about Bitcoin, right? Like there was the billionaire in Mexico, Elon mentioned it. Like you're starting to get people who are wealthy enough that they have their like kind of like 5%, oh, this is super high risk, high reward investment. And then they put their money in. They put $100 million in. They put $1 billion in. They can't get out of that market. If you sell $1 billion of Bitcoin in 2018, 2019, it falls 50%. There's not enough liquidity during the day to leave that position. But you wait 5 or 7 years, it opens up into IBIT and ETFs and traditional markets. Now liquidity is $3 to $4 billion a day. You can sell $1 billion and the price doesn't move at all. And that's actually what we saw, is the 5 to 7 year stock on chain of the UTXOs that had that age from the 2017 to 19 era. were actually dumping. There was a lot of, and they weren't in a rush. They weren't letting, they're like screaming to get to the exits, like this is panic. What was actually happening was they took a 5% high risk, high reward position. It fucking 20x'd in that time. Now it's 90% of their portfolio. All the ETFs open up and everybody in the world, the liquidity explodes. And so they spend 6 months just kind of offloading that 80% back down to say 10%. And they need that liquidity to exit. And so it ends up behaving a lot like an IPO. But then what happened after that historically on Amazon, everything that ended up quote unquote IPOing that was like a major, like it's seen as like this huge thing that was going to succeed, it just slowly starts to climb again until it gets the application, it finds the network thresholds and atomic networks and this and it builds it back out. I think we're going to grow. I don't even think this bear market is going to be, again, 4-year cycles. They become obvious. They break down. I think now everybody expects like a 2-year bear market. I don't think we're going to get that either. I think we're going to have a psych out bear market, maybe half a year or something. And then everybody's going to leverage in the opposite position to be like, oh, well, I have to prepare for a bear market. And then it's going to kick them in the nuts, because that's what Bitcoin does. Bitcoin is path of greatest pain. It is the path of greatest pain. If you think it's going to do this and you get ready for that, it's going to punch you. It's going to kick you in the nuts. And as soon as you think it's going to do the other thing, you're also going to get punched in the nuts. Just stop and stay humble and stack sats slowly. That's all you need to do. Stop trying to predict it.
So one more question on this, and then we're going to move on to the Epstein conspiracy. Firstly, the IPO one makes a lot of sense to me, because I got lucky and bought some Bitcoin when it was at about 5K. And so if you were to look at my portfolio from any typical investment strategy, you'd go, holy shit, you've got 90% of your net worth in Bitcoin. Maybe you should sell. And
you're not like a hardcore. You don't have a Bitcoin Audible show, right? You're like, how much should I really keep there?
Yeah,
right?
you go, yeah, exactly. You would go, this is a lot of risk to have in one asset. And I was more like, I kind of like this asset. And I'm more just looking at it from a dumbass of, it's all free in-house money, because I didn't actually spend $100,000 on Bitcoin. But if you looked at my net worth, you'd be like, you shouldn't have this much net worth in a single asset. So I understand that a more sophisticated investor would be like, hey, you got to draw this down. And so I guess if you're a very wealthy investor, so that does kind of check out to me. All right. So just last on this, though, is that I noticed it at the beginning of the COVID pandemic, was that, in my head, Bitcoin was kind of supposed to be an inflation hedge alternative currency. And it was just kind of trading like the market, which was because I think so many retail investors just looked at it as an investment thing. And so when people were sitting on too much cash, or stock market was doing well, they're putting winnings into Bitcoin, or you just got your finance bros or wherever getting excited about it. How much of the current price do you think is still just reflected in kind of the speculative, stock market investors, that if we have a massive downturn, like I would hope or like to see Bitcoin not trading the same as the stock market. And it somewhat appears to be moving in flux with like the stock market and all the financial products that you and I would like to be getting away from. I guess, when might we finally see a divergence that Bitcoin is really its own asset, or how much of the current price is like, let me just state it differently. If the stock market crashed 30% tomorrow, is Bitcoin coming down in tandem, or do you actually get a flight to quality that people are picking up Bitcoin to turn away from the other assets?
I would say, don't forget that in the short term, Bitcoin is extremely liquid. Like, you can sell Bitcoin faster than you can sell a house, faster than you can sell gold. Like, you can get into and out of Bitcoin when you have it extremely quickly. Even if you have it in cold storage, you just break out your key, you send it to an exchange, in under 10 minutes, you can sell it. Which means that when there is a market downturn, it is the thing that's easiest to go sell to hedge up your stock leverage, or to hedge something else. But that liquidity, or that essentially the part of the market that does that will get exhausted very quickly as well. And we see that kind of historically. 2020 is a great example, right? Is we literally had like a 50% dump in I don't know, like 2 weeks or so. It just like horrible, just a huge aggressive dump. And then literally in the next like 2 months, it completely recovered. It was like, it was just like actually, and then come right back.
In my opinion, that's a good selling point long term, because I've worked sales, and my philosophy has been be easy to break up with, because if someone needs to cancel a contract and you let them off real easy, then sometimes they go, oh, that guy was actually easy to work with, and they come back.
Yeah.
And so
yeah.
I like, you know what I mean? Like gym memberships that are a pain in the ass to cancel, I don't want to re-sign up. And so
you leave a bad taste in my mouth. It's like, no, I had to fight for this, so I'm not going to undo it.
I've let people off the hook on contract terms that they were for the duration of time that they were supposed to be in something, just to be easy to break up with. So I could see that being a sale for Bitcoin as well, of when you have money again, you're like, well, this was easy to get out of. All right. So before we change topics, any other anything else that you would like to note in terms of the big ups and downs as of late, or you think those were the major reasons for people to be aware of?
Those are probably most of the major reasons in my mind.
So now this is what we've been teasing people for. They've been waiting for this. The internet thinks that some people even want to say that Epstein is Satoshi Nakamoto, or more accurately,
that's my favorite. I got to tell you, that's my best. That's the best one.
More accurately, and it's people can go down the Run Your Mouth archive, because we definitely delved into this conversation before, but the Bitcoin detractors who like Bitcoin Cash and think that Bitcoin was hijacked, and we can get into the specifics, which you could explain a lot better than I am, but basically, and how easy it is to do transactions and block size and blah, blah, blah. You would actually know these details. But the speculation or the conspiracy is that Epstein was involved in the hijacking of Bitcoin, and that it was supposed to be more of a more easily to use for financial payments. And he worked with the team at MIT to thwart that plan and turn it into more of a financial asset. So instead of my nonsense of my memory of just picking apart these lines that I read in articles, maybe you could actually explain and even strongman what the conspiracy is of why people think that Bitcoin was hijacked and what Epstein's relationship was in the hijacking. And then we can debunk it. And then I warn you before I let you off the hook, I do have an article here that we're going to respond to that, from what I saw, did the cleanest write-up of the conspiracy.
Okay, cool. Oh, actually, this is actually good. I haven't read this one. So I guess I'll steelman and talk about kind of the block size war that's in reference to this first. So to go with the big blocker argument, right, is that Bitcoin for basically up until 2013 was extremely easy to transact with. There were essentially no fees. It was sold that way, that you could basically send money for free anywhere in the world instantly. But Bitcoin did have a limit, a quote unquote block size limit. There's only so many transactions that can be stuffed into the Bitcoin system at any one point in time. And Satoshi even said, funny enough, the very first response on the cryptography mailing list when Satoshi released Bitcoin into the wild was, "This is a cool idea, but it doesn't scale." Is that you're never gonna be able to put the whole world's transactions on this system. And but Satoshi, when being addressed with this problem, often just kind of said, well, we can increase the block size. We could, like miners could go to mining farms and all this stuff. It was a little bit, in my opinion, not in the Steelman opinion, but in my opinion, it was a little bit like kind of hand wavy of like, we'll do a verification, SPV, or
you can make
basically blind verification to, nobody knows what the fucking I'm talking about. That's a good point. Basically a way to like blind verify that the Bitcoin system is honest without actually having all of the information. But the reality is that none of that ever really came to to fruition is, and more importantly, is that you have to have consensus to change Bitcoin if you're changing the consensus rules. And that became like the biggest debate, because the reason Bitcoin is decentralized is because anybody can run a node. You know, I imagine I could download software and I could audit the Federal Reserve in just a couple of minutes, and I could see and know without a doubt that every transaction coming through is according to a very specific rule, a set of rules, very specific inflation schedule, all of it. And specifically, if anybody ever changed those rules or diverged from the inflation schedule or tried to spend money that they didn't have or loan money into thin air, is that I would actually disconnect from them on the network. That I would immediately say, this is an attack, and I would continue to run the Bitcoin that I knew. That's essentially how the consensus system works. If you don't run a node, someone can just lie. You're not actually doing the checking, and you won't disconnect from someone who lies about, or breaks the rules or lies about the state of Bitcoin. They can literally just make up history and you'll just follow along with it. So the question is, from the context,
on that, I know that this is ADD, but can I interrupt and ask a question there?
Of course.
What's to prevent like a Coinbase or someone else who has amassed so much of the Bitcoin to basically just augment it and have, like, is it possible for someone to kind of conquer majority rule and then just go, hey, I own all the Bitcoin? Like, could the Federal Reserve buy enough Bitcoin to turn around and go, all right, now all Bitcoin is owned by us, and the software would be stuck with that consensus?
Well, owning Bitcoin doesn't really have anything to do with the consensus.
Oh, okay.
Because you don't, like Michael Saylor doesn't have any additional say over the rules. The potential influence is purely social. It's like, is everybody going to listen to Michael Saylor because he has a lot of Bitcoin? But what we saw, the block size war is actually a really good example, because most of the really big Bitcoin companies, because the mining company that had 70% of the hash power, or excuse me, not 70% of the hash power, they had they owned 70% of the mining industry for like sales, and specifically had a bunch of mining pools that were like, okay, well, sure, you've got a plan, we'll go along with your plan. They actually did try to change Bitcoin, and it didn't work. They basically, everybody, all the nodes just held the line and said, okay, go make another shitcoin and sell it. Because that's what happens if they try to change it and it doesn't work. And so if the network, and it's not, what's funny is that it's kind of like, if you can protect it for yourself, then all you have to do is assume that everybody else will do the same thing. And it doesn't really matter. It's not like a vote. It's not a vote. It's not like, oh, you can just spin up like 10,000 nodes and now it's like, oh my God, there's 10,000 nodes that do this. No, you literally, it's just kind of like hold your economic ground. Is no, I'm going to stay on Bitcoin, and the pressure to stay in consensus with the network, with the infrastructure, with the channels on the network, and Lightning, to the everything that is already running on the network, it is harder to upgrade and force everyone else to upgrade than it is to stay on the network as is, if they are refusing to upgrade. And they actually, one of the big reasons is that they created a futures market for the forked coin just before the fork was happening. And so you could actually sell your Bitcoin Cash before the fork actually happened and buy more Bitcoin. And so what happened is that a ton of people went up, myself included, went up and sold
Bitcoin Cash.
We shorted because I wanted more Bitcoin, and I was running a node that was saying that, like, you know, you're trying to change the network, you can suck it, because we're not going to do that. And so basically the network held its ground. Now all the big blockers are getting super pissed right now because they think the opposite happened, right? But that's kind of the Epstein theory and the Blockstream, and there's so many different culprits as to how Bitcoin got hijacked, and it kind of changes every couple of weeks. It really, I mean, my personal take is that anytime there's anything remotely negative that gets associated with Bitcoin, It's just like that's why we lost the block size war. It's a very like a hindsight bias of like, oh, Epstein's now connected to it. That's because of the block size
all right,
war.
so in terms of the block size war, was the original software, I might not be asking this technically correct, is the original software or design for kind of current block sizes, and then the Bitcoin Cash people wanted to change it to make, I guess, larger
They want to
blocks?
make it a lot bigger.
They wanted to make it bigger, so they were the ones who were trying to implement a change.
A change in the consensus rules that if you didn't upgrade, you wouldn't follow it.
And then so they were trying to initiate the change. The consensus was not to make the change. And then they turned around and said, you guys have hijacked this thing. But they're a little bit, their argument is that the change would have been more in line with Satoshi's idea for how this should operate, and that he didn't build it correctly, and so it needs this change. It's a little bit like
so they believe in the social consensus, and you know, to piss them off, they got butthurt that the protocol, how the technological consensus works, didn't go along with the social consensus. But even Satoshi said that kind of the design of this thing, like this is what makes it so powerful, is that it's so easy. The dichotomy of the cost of defense versus attack weighs heavily economically in the towards defense. Is that it's easier to defend, it's easier and cheaper to defend than it is to attack. This is kind of the nature of cryptography, the wild thing that it costs very little to encrypt something, but it costs a fortune to break that encryption. This same dynamic is applied in a very novel economic system inside of Bitcoin. And Satoshi said himself that, you know, the nature of this thing is that kind of once version 1.0 is out, it's kind of stuck that way. Like it's just kind of going to work this way indefinitely, and you can't make huge fundamental changes to it. And the block size is one of those fundamental changes. And we argued about it. Trust me, we argued about it for like 5 years straight. And then a bunch of people were basically like, we're sick of this argument. We're going to force your hand. You're going to do this. And we were like, no, we were still arguing about it. You don't have fucking consensus, so you're not going to get it. And that's what happened.
All right. So let's delve into the conspiracy. A lot of the fans want to know if I'm going to take comments. Maybe at the end of this topic I will, but you know, this is my time with Guy, and I want to get my questions out, and you guys are lucky that I do a podcast, so you get to come along for the ride. So this was from the Brownstone Institute. I'm not sure if it was a Jeffrey Tucker article, but Stockman, who I love, retweeted this, and so I was reading through it. We're not going to read the entire article, but I did screenshot 3 of the pages that I thought were probably worth responding to. So I'll read this, and then and you can tell me to stop at any time if you want to take a paragraph by paragraph, or you want to take the pages independently. So this was firstly on the MIT part. So MIT steps in, and Epstein's money is there. The group that controlled Bitcoin's main software, called the Bitcoin Core, used to get paid through the Bitcoin Foundation. That organization fell apart in 2015 after scandals and financial hardship. Almost immediately, MIT's Media Lab Digital Currency Initiative started paying the same developers' salaries. Firstly, is this accurate? That
it's relatively accurate. Yeah. I mean, it wasn't. They neither one of those were the only sources of funding, but no, that's pretty accurate. Yeah.
Okay. Jeffrey Epstein had given MIT $850,000 over the years, including $525,000 that went directly to the Digital Currency Initiative. The Media Lab director at the time, Joey Ito, hid Epstein's name. Joey Ito. Hid.
But yeah.
All right, I'll just say Joey. I'll just
Joey.
say Asian face. Hid Epstein's name and called him Voldemort in emails. Ito quit in 2019 when the connections came out. Epstein also put $500,000 into Blockstream, a company that built tools to keep Bitcoin on the small block path and promoted Lightning Network. That investment came through a fund co-owned by Joy. But look at this actual email from the Epstein files dated April 25th, 2015. Epstein writes to Ito, I like how I pronounce it differently each time, Gavin is clever. It had also just thanked him for the gift funds that underwrote the digital currency initiative launch. And here was the email. And this is where people are pointing to say that, you know, Epstein was involved in the hijacking, and then we'll get into what they think he was conspiring to do. The way that Bitcoin is organized currently is that there are 5 core developers and around 100 contributors to the core code. The 5 core developers are like Linus Torvalds of Linux. They decide what changes are made to the core code. One of the 5 is the lead scientist, Vladimir, and one is the chief scientist, Gavin. Gavin, Vladimir, and Corey, an important contributing developer, were being paid out of a nonprofit organization called the Bitcoin Foundation. A few weeks ago, it blew up, and one of the board members declared the foundation bankrupt. Many organizations scrambled into the vacuum created by the foundation to take control of the developers. We moved quickly, talking to all the various stakeholders, and the 3 developers decided to join the Media Lab. This is a big win for us. So before we move on to, I guess, the last part of this conspiracy, is there anything there that you want to respond to?
Respond to or verify, or like
I guess either. Yeah, if you want to give us any context to what the claim is here, or why it might not be true, or why it doesn't mean anything, or why maybe you weren't aware of this.
Okay, so we want to address it. Go ahead and address
it, and then we'll say and then we'll delve into what they think Epstein was trying to do.
Okay. I'm actually curious what their argument is Epstein was trying to do. But so yes, all that is, well, at least it's verified in the Epstein files. And one of the things here, though, is that they don't really point to anything that had control or any basically concrete investment in one direction or another. One of the things they left out, unless it's mentioned later on, and maybe it is, I don't know, is that they also invested $3 million. He also invested $3 million in Coinbase. Then in regards to the Blockstream investment, he invested $500,000, which was actually a tiny investment in comparison to all of his other investments that year. He did a bunch of different fintech. He did $40 million in Valar something. I can't remember exactly. I've already forgotten it, which was a fintech fund for a bunch of general fintech investments. A lot of his conversation around Bitcoin is literally talking about like money laundering and stuff. This was the year after the Silk Road collapsed, and which was an online drug market. And so of course he's interested. He has a pedo criminal global empire. He's like, oh, digital money that's used for drugs. This is cool. Maybe I can use this. So of course he's going to have some sort of an interest in it. And when it comes to the Blockstream investment of $500,000, their first round closed at $21 million. And then their second round closed not too long after at $55 million. So it was also a pretty minor investment when it comes to the entire scope of like people investing in Blockstream. But more importantly is that investment actually only lasted like 4 months or 5 months, because he bought in to the first round, and then Austin Hill, one of the co-founders of Blockstream, got word that he was also investing in Ripple and Solana, I believe. No, wait. No, Solana. That's not. I don't think Solana was around in 2014. I don't know. Two other shit coins. And they said that's a conflict of interest, and they forced him to divest. So his involvement with Blockstream was actually a very short period. And then when it comes to the MIT Media Lab, Gavin was a big blocker, and he was funded. Vladimir was kind of a small blocker, but he also wasn't really prominent or pushing either direction. In fact, the big argument and the quote unquote user activated soft fork came from outside the group of the core developers, because they didn't want the responsibility largely of making a decision on that. And importantly, this was also 3 years before most of that stuff happened. And we didn't even have a clear path in 2014. There was the battle lines had not been drawn in 2014. It was not really the context of what was happening in 2014 and 2015. It wasn't until 2015 that even the first proposal for the Lightning Network came out, and it wasn't until the end of 2015 that SegWit was finally proposed, as the argument got really, really serious. So this was already a year and some change after he had divested from Blockstream specifically, and he invested $3 million in Coinbase, which he was still invested in. And Coinbase were aggressively on the big blocker side. They were one of the major corporate interests that were trying to fork the chain with SegWit 2x to go do a quote unquote Bitcoin Cash path. And he stayed invested in them until 2018. In which he divested about $15 million. This is all in the same conversations and stuff. And he pulled $15 million out of that and kept half of it. So presumably he still had half of his ownership shares in Coinbase when he died in 2019. And importantly, there's zero meaningful discussion about the protocol. There's absolutely no indication. I have gone through And I haven't gone through all of it because it's a lot to read, but I've been breaking down. It's like 1,000 mentions or a little bit more of Bitcoin in the emails. He has absolutely no mention of like protocol direction or an opinion on the block size war or what they want to do. I think he's just like, oh, cool. I can have power over this thing. I can control the Linus Torvalds of Bitcoin. And so he's just like, okay, well, I'll make a play. But again, he had no, like the only two comments that I have found so far is that, oh, but it has some risks, and oh, but it seems inefficient. And those are kind of like meaningless VC comments about something, is I don't really know anything about it, but I'm going to make a comment about it to make it sound like I have some sort of input. Not only did he invest completely randomly in no particular correlation to, and importantly, I'm not saying that because he invested in Coinbase, he wanted big blocks. I don't think that at all. I don't think he gave a shit or had any idea about it. He was just throwing money at stuff and wondering what was going to stick and wondering if maybe he could have a part in this thing. And then he seems to have gotten bored with it, and all of the mentions of it kind of decrease over time. And then he was busy with his child pedo empire.
So from what you've seen, he took an early interest in Bitcoin and digital currencies, but you haven't seen any.
You heard about a drug market that used it. It's kind of like, well, duh.
But you haven't seen any evidence thus far that he was interested in basically the Bitcoin Cash over Bitcoin.
Yeah, I don't think he so far has not made a single remark in either direction, or again, anything even meaningful about the protocol that he even understood how it works. All right,
so before I read this next page, people in the chat, if you've seen any evidence of the fact that Bitcoin that
I'll keep digging
in this conspiracy that Epstein actually took an interest in the block size. Before I read what they think the conspiracy is here, if anyone in the chat has or has seen any evidence of that, put it in and I'll ask it to Guy. All right, so let's read this this next part of it. And this is jumping ahead in the article. Everyone can go find this article. I'll put it into the episode description. You guys might read a whole page that you feel like that's what I should have highlighted, but here's the other part that I highlighted. The end game, genius clarity, and the Bitcoin reserve. This is the full circle. Epstein funded the MIT devs who killed Bitcoin as cash. Brock Pierce ran the Bitcoin Foundation into the ground, opened the door for Epstein's money, brokered Epstein's Coinbase stake, sat in Epstein's mansion, pitching Bitcoin to Larry Summers, co-founded Tether, and kept emailing Epstein until 2018. Tether then printed unbacked dollars to pump Bitcoin 50% in 2017. Howard Lutnick, who lied about cutting ties with Epstein, took over management of Tether's 130-plus billion treasury reserves before he even joined the Trump transition. He pushed for Treasury Secretary, landed at Commerce, installed his ally Bo Hines as White House crypto advisor, had Hines ran through the Genius Act, then watched Hines quit the White House and immediately become CEO of Tether's U.S. subsidiary. Every single player is connected. Every single move is coordinated. The Genius Act entrenches the exact loopholes Tether has lived on. The Clarity Act's hands, that's blocked by my can, regularly cover ups to the same insiders. The Genius Act's entrenches the exact loopholes Tether has lived on. The Clarity Act hands regular. Am I reading the same page? No. That's Clarity Act,
the same line, but yeah, keep going.
Yeah, I got you. The Clarity Act hands regulatory cover to the same insiders. The Bitcoin strategic reserve sits on the top of a coin whose price was artificially inflated by the same stable coin they now regulate, whose core development was funded by Epstein, and whose usability was deliberately destroyed by the people who profit from the fix. This is not the Big Short 2.0. This is the Big Short 2.0 on steroids, pre-planned and run by the same network that already owns the outcome. They created the crisis, crippled on-chain Bitcoin, printed the fake money to pump it, Tether, positioned themselves to own the solution, Blockstream, Cantor, USAT, wrote the laws that protect their scam, Genius Clarity, and are now preparing to step in as the savers when the bubble they inflated finally pops. They walk away with fees, stakes, revolving doors, jobs, and permanent control over programmable money. We get every transaction tracked, every dollar programmable, and last remnants of financial freedom are erased under the banner of innovation and stability. This is not incompetence. This is conquest.
Okay, where's that? I want to read this one on the show. Can you send me, because I would love to do an episode on this. Can you send me the link?
Absolutely. I knew that you would be into debunking this, and I
Yeah.
wondered if I should send it ahead of time, but I was like, I'll just get you on the spot.
Actually, can you put the first page back up there? Because he did like a paragraph of like 20 things, and I want to kind of go piece by piece.
Yes. All right. Well, before we go piece by piece, if I'm putting my stupid on this, which is what I'm good at, it sounds like they're trying to crash Bitcoin to get basically a central bank digital currency of which they get they're somewhat involved with, so they're getting the fees, a little bit like what Al Gore was trying to do with carbon credits, and we're all stuck on a currency that the government now controls, can inflate, track every transaction, and these guys can be in on the fees. But on the flip side of it is that they're kind of assuming that Bitcoin crashes and that Tether is then what's picked up, I guess, as the government as the stable coin. I don't know. Is that, broadly speaking, is that kind of what they're...
Sounds like what they're saying is that they're gonna, the move was to take over Bitcoin so it wouldn't work, then invest in Tether, and then Tether could become king stable coin, and everybody would be on a CBD. It would be the backdoor way to get to a CBDC, and they could then kill Bitcoin after the fact, and Tether controls the regulation and all that stuff. And that this was all premeditated. So and I guess they knew this back in 2015 or whatever.
And then the other, I guess, fatal flaw to this theory is just assuming that Bitcoin Cash was the right move and that Bitcoin fails unless it has larger block sizes. So that's that's a, I guess, a heavy assumption, and something that the hardline Bitcoiners would say, no, it was never, as you've already explained, it wasn't hijacked. And that's not the way that the network is supposed to operate. All right, that's enough of my commentary. I'll let you take it over.
Okay, so first, Brock Pierce was like a huge, ridiculous scammer. He is actually probably, I think from what I've seen, I could say that Brock Pierce is probably the one with the closest connection to Epstein. And Brock Pierce is a super mess. Like he was a mess. I always just thought he was so shitty and shady, just weird. And it's interesting that he brokered Epstein's Coinbase stake. But they don't mention that, again, Coinbase was on the big blocker side. So he kind of pointing at things that happened, but they don't actually align with the narrative. Like, yeah, he was connected to Brock Pierce. Brock Pierce was always kind of a shady, crappy person. The Bitcoin Foundation was also just kind of shitty. A bunch of the cypherpunks didn't really care or thought it was ridiculous. In fact, I remember making memes myself of that, like, Bitcoin Foundation. Bitcoin doesn't have a fucking foundation. It's open source. You don't really control anything. They were not seen as like the end all be all of like Bitcoin decision making. A lot of people were kind of annoyed that they kind of took that position on. That opened the door to Epstein's money. Okay. Brokered Epstein's Coinbase stake. Again, Coinbase, big blockers. So that doesn't really align. Sat in Epstein's mansion pitching Bitcoin to Larry Summers. Neither one of that surprised me. Epstein's connected to all sorts of tech people, and Brock Pierce is a creep. Co-founded Tether. Wait, Larry Summers co-founded Tether? Or? No, Brock Pierce did. Yeah, I think Brock Pierce was in early on Tether. Okay, yes. Kept emailing Epstein until 2018. Yes. Tether then printed unbacked dollars to pump Bitcoin 50% in 2017. That is just a total assumption that basically a ton of people repeat. And there's even there's an account that has been calling for the death of Tether for like 10 years now because it was all unbacked. And what they do is they literally point at, and I'm not even saying that there's not necessarily any point in which there were unbacked Tether. And I think, in fact, the original Bitfinex issuance or what of it, if I'm not mistaken, how did they do it? I'm not going to get the specifics right, so I'm actually going to ignore that. But I'll just talk about the general idea is that printed unbacked dollars to pump Bitcoin 50% in 2017. First, Bitcoin went way bigger than 50%, so I don't know why they wouldn't say it went 600%, because like the move was something like that. But also, what we see with stable coins that are unbacked is they die really quick. We've seen as soon as they break from 100%, They like fluctuate between 99.5% of the price of a dollar to 100.1 or 0.2%. As soon as that breaks and people actually start getting the slightest bit nervous and they start to withdraw, the whole thing goes up in smoke. If it is unbacked, it dies very, very quickly. Tether has been around for a very long time, and specifically, they literally just buy. They make so much money and they don't have to do anything. It's the easiest business plan ever. They buy short-term government bonds and make interest on the money that people give them to get Tether. And so they're just sitting on like hundreds of billions of dollars in bonds that pay them interest, and then they just run the network. So they're actually the only real example today of a fully reserved Bitcoin bank, and they issue only fully reserved dollar bank that issues dollar tokens in reserve. And what they do is they go and point to like, oh, $1 billion of Tether got issued, but they don't ask. There are third-party audits and things that they do pretty regularly of, do you have reserves? And I honestly think that I don't see how Tether would have possibly not died by this point if they were not.
So they're
backed.
kind of they're almost a better bank because they don't engage in fractional reserve banking. They let you spend your currency as a digital asset.
It's actually kind of like digital cash as it was back in if you had digital cash and you wanted to put it in the free banking system back in the late 1800s, Tether's actually closer to that than it is the ridiculous fractional reserve banking system.
And they're making 3%, almost like a credit card fee, because they're just buying
because they're just buying bonds and the U.S. government pays them every month.
And the government is actually happy with this arrangement because cash that otherwise might not have made
for bonds.
It gives them liquidity for bonds. So it's funny because even though that's not Bitcoin in any capacity, that seems like a very smart technological use for money. Of that one, if they're not engaging fractional reserve banking, even though I guess you don't have your FDIC insurance, that sounds better overall for like inflation and kind of and kind of the general economics market, in my opinion, because you don't just have fake money in the system. That almost sounds like a perfect. I hate to back Witkoff here. He seems like a total scumbag, but that sounds like a pretty valid financial institution. Hey, here's digital current. Yeah.
What the way I like to think about it is that stable coins, especially if they are quote unquote KYC light in the context of like Tether, is that like I could open up a Tether account and somebody could send me a stable coin, or they could send me Tether right now. And I wouldn't have to fill out a form on a bank and like, send them a sperm sample and all of that stuff. I just make a key and they send it to me. But they do censor transactions. They do freeze accounts because there's a master key essentially. So when somebody says this was somebody who robbed us, or this belongs to North Korea or something. In fact, I think actually Iran had Tether and like a fifth of their accounts or balance or something got frozen when it was discovered that some of this belonged to the Iranian government. Like there's a bunch of examples of that. Like they absolutely freeze accounts and stuff. But they do so in a reactionary sense, not in a proactive sense, which is what we have in the current banking system. So when I think about it, is like Bitcoin is like perfectly sovereign, technologically open, permissionless, no trust. Like you can run your own node, hold your own keys, and nobody can freeze your account. So if that's a 10, and our current fiat shit banking system is a 1, a stable coin is kind of like a 3. It's like, okay, it's actually substantially better than the fiat system, but it's a huge leap from Bitcoin in the context of like what's possible. And here's the thing, is centralized. So it's always going to get choked out by regulation. Now, here's another part of their thing is that, oh, they're going to kill Bitcoin. They pumped Bitcoin so that they could then kill it later. And they were going to take over the regulatory environment so they could be the CBDC. I just have to ask, please, like, we're just going to put the conspiracy theory aside. Can you explain to me a time in which you have ever heard of a company with $300 billion not having a hand in a regulatory decision? Ever. Like, so you're just saying this is what led to this, But we live in a world in which there's no way at all that they're not going to try to be involved, that they're not going to try to protect their investment and their business, and that they're not going to try to have some sort of control or influence over the decision of the regulations that regulate them. Like, it's like, that's just basic common sense. That's going to happen. So if you already just have like a conspiracy theory, and then you point to that and says, see, this proves my conspiracy theory. It's like, well, yeah, it also proves that we live in the real world. You know, like, of course they're going to do that. Like, I could make up a completely different conspiracy theory and point to, see, they tried to influence the regulations, and it would confirm that one. But it doesn't have to relate to anything. It doesn't have to lead anywhere. The connection is just that they wanted regulatory influence. Fuck it, duh. That's all politicians and big companies and shit do.
Genius and Clarity Act, because I've close to zero familiarity, but were those actually, if you're just a Bitcoin maximalist like yourself, do you go, these were good for Bitcoin, or do you go, hey, these are...
That's hard to say. There's some parts of it that like really are shitty for like kind of like privacy stuff, and like I'm a huge like diehard on like privacy tools are not a fucking crime, and they're not like super friendly with that. I would say it's probably a mixed bag, as any regulation probably is, but I would anticipate that a mainstream market and kind of the business world sees it as like a big win, because like there's clarity, right? It's like, I have explicit rules and I don't have to worry about, does my business get shut down tomorrow because I made the decision to delete old accounts or something, and I was supposed to hold them for 7 years, or I was supposed to KYC somebody I didn't KYC, and I have to owe them, I owe the government $1 billion, and they never even told me what the fuck I was supposed to do to begin with. Like, so I think from the context of like stability in the infrastructure and the market itself, it's probably a win. But in the context of like, do I think it's good for Bitcoin or like all the tools that I want to see built? Mixed bag. There's some stupid shit in it for sure.
All right. Unless there was anything else you wanted to call on from that, I'm good to move on.
Go back to the page. Go back to the page. I just want to look just to see if there was something else.
Yeah, that was you were interested most, I think, in the first page, right?
Yeah. And then throw up the second page real quick. I'll just scan.
Well, sorry, this was the email, and this was the first page.
Yeah, that was the email. Yeah. 125,000. Yeah, Epstein wrote Gavin is clever. Cool. He was. And shout out to Gavin, actually, because Gavin even denied or turned down going to see him. And I'm surprised they didn't actually put Adam Back in here, because Adam Back was one of the co-founders of Blockstream. And it's very possible that Adam Back actually may have went and met Epstein and traveled to his island during the time in which they were doing investment. They were actually had a connection for between July and September of 2014. But that's hard to say. There's not like exact confirmation on it. But if I was like super on this conspiracy theory, I totally would have put that in. I'd have been like, Adam Back went to the island for sure. And to go to the next page.
Next page was, and by the way, just to remind everyone, my screenshots are not the entire article. They're not all in order. And
I'll read the whole thing. I'll read the whole thing on the show.
Guy is going to do a follow-up episode. Plug your podcast again. So if anyone's
Bitcoin Audible,
curious,
well, no, it's right here.
There you go. Bitcoin Audible. You can hear the entire Guy Swann breakdown, which I will have to listen to as well. And then this was the layout of what the author believed was the end game here.
Okay, Tether's reserves before he even joined the Trump transition. Lied about cutting ties with Epstein. Took over management. Okay, sure. Started LA as the White House crypto advisor. I don't know anything about Bo Hines.
All right, let's move on to the next topic.
Yeah.
And I'm going to listen to your episode. I can also follow up if there were any other Big bombshells. All right, before we take this one, let me just plug a quick sponsor, which is sheath.com. Greatest underwear that's ever graced the balls of man. If you use promo code RYM, you get yourself 20% off. I swear by Sheath. I was just out in Key West where luckily the weather was real nice and I was able to run, ride a bike, and do all those things with no chafing between my legs. Nobody likes having chafed thighs. It's as good of a technology leap as Bitcoin itself. So if you're interested in having nice, smooth thighs that aren't all greasy, sweaty, and disgusting and chafed up, you go to sheath.com, use promo code RYM, you get yourself 20% off. All right, we're going to play a clip from this author who was just on Tucker Carlson. I'm going to guess that we've already explored everything that needs to be explored about this storyline of the block size wars. But with bringing up the book, I don't know, is there anything else that you think listeners should be aware of in regards to Roger Ver or what the theory in this book is, or do you think it's ground that we've already covered in the episode?
It'll probably come up in Roger's clip just for something to address.
All right. Any personal takes on Roger? I'm not too familiar with him outside of that.
Man, I have even tried to. I've interacted with him a few times, and I have tried to even like put the bridge back up. Like Roger Ver was like a big part of, like, he was super prominent when I first got into Bitcoin back in 2011 or so. And he, you know, he was super passionate about it. I think he's like a solid libertarian. I think he has those ideals or whatever, but man, that dude cannot let go that his fork, dude, we were like built in Keat. There's like a new peer-to-peer technology stack that like I'm super jazzed about, and he like showed up in the room and I was like, oh shit, man, maybe Roger can come back and we can actually talk about like building peer-to-peer tech, and like he can go, they do Bitcoin Cash. If Bitcoin Cash is the way, fuck it, cool, like let it succeed, you know. I still think it's Bitcoin, so I'm betting on Bitcoin, and I think the reasons that they forked off are just wrong. And they fundamentally misunderstood how the protocol worked, and it's actually why the user aggregated soft fork won. But we'll get to that if he brings it up. And so I was like, yo, Roger, this is super dope. And then he immediately was like, you're all just using shit coin. You're just Bitcoin Cash is the way. And I was like, bitch, we're trying to actually build something. We're trying to do peer-to-peer stuff. We're trying to like solve the platform problem. And he just was immediately, nobody was talking about, like, this wasn't a conversation about the block size war. We were just talking about building cool shit. And he could not have a conversation about it. And it's just like, my God, man. You know, like if Bitcoin Cash was actually the way, like it would just eventually succeed. It would eventually work, because like we're not gonna like not have the best money because like somebody like said like don't use it. You know, like this was not, if that's all it took to kill like the actual best money.
Oh, you're saying,
well, then the actual best money is going to do us much good. You know,
you're saying, listen, we're libertarians, and you took your product idea and you put it out to market, and the market doesn't prefer it. So why are you yelling at us for having a competing product? Which I think is a very valid complaint. Bitcoin Cash exists. And if people preferred it, the entire market could just adapt it. All right, so let's play this clip. The topic, I'm starting at a few minutes in, where he makes. Listen, you guys can go watch this for yourself, but he makes what I think is a pretty unimpressive claim of that there was influence on the forums to push the smaller block size, and he says there was an investment of all of $10,000, which just doesn't sound like, if the CIA was trying to influence something, that's the amount of money. And that he says it might have been more, but it was that's the number he says. But we'll take it from here. I'll let you respond to I guess the section that I highlighted
later in, I believe, 2000.
Are you able to hear it, by the way?
Yeah.
Okay. Fans, tell me if for some reason you don't have audio.
12. A person using the name John Dillon, who claimed to work for intelligence.
Oh, wait. Hilarious. I don't have it up on screen, so you can hear it, but they definitely can't. And I actually don't know if I did the audio correctly. We should be good. People in the chat, let me know if we don't have sound for this.
Spent more than $10,000. I forget the exact amount, but a significant sum of money to start producing propaganda to trick people into thinking that by keeping the blocks on Bitcoin small, it would make it more decentralized. And literally the exact opposite of the truth, the exact opposite of the way Satoshi Nakamoto, the creator of Bitcoin, designed it and promoted it, and the exact opposite of the way that people were using it. And nobody believed the propaganda initially. But then later, this giant wave of censorship took place. Anonymous people that nobody knows their real names managed to get control of all the main discussion platforms for Bitcoin. And then suddenly, one day overnight, nobody was even allowed to advocate for Bitcoin being used as money. And they censored anybody that tried to do that. And initially, everybody saw through it. But then everybody that came to Bitcoin after the censorship began, they just started believing it. And today, the main people that are out there promoting Bitcoin, they literally say, oh, Bitcoin shouldn't compete with the US dollar. Bitcoin, you shouldn't use it as money. You shouldn't use it to pay for things. Like Bitcoin is just a digital asset. You should just hold it. And it's the exact opposite. They've through the censorship and the propaganda, they've literally hijacked Bitcoin. And I literally wrote an entire book about it. You can find more at hijackingbitcoin.com. It's available on Amazon and everywhere else. And lo and behold, just a couple of weeks after the book is published, I get arrested, and now I'm facing 109 years in federal prison for.
Well, pause it there. I'll give the dumb man's response. I've never once heard Bitcoin people say that it should not be used for cash, or that you shouldn't transact with it. Yeah.
Me neither. That's like so. That is like one of those things that just so ridiculous to me, is that like this idea of I'll as someone who has been here tried to explain this the entire time, is all anybody has ever talked about Bitcoin is being global money and going to be the best monetary asset and digital network for payments, for money, for contracts, for everything, because it's just better technology when it comes to comparing it to gold or fiat. That the only context of store of value is that comes first. You can't use something as a medium of exchange unless you have it. And you're not going to get the whole world to adopt something that people don't have as a medium of exchange. This goes back to my original point of the whole chicken and egg problem. Is that okay, how do you establish a network that has enough people in it, that has an atomic size in which you can actually make enough money from people who have Bitcoin to keep your Bitcoin and then spend it on other things? That takes a long time to establish, a really long time. And the way that you actually can establish that network is by having Bitcoin just be a sounder money so that it is a proper store of value. It's an investment vehicle before it becomes a medium of exchange. For people to desire something in payment, they have to already desire the thing. You can't skip that step.
And how do we get past because in terms of it being a store of value first, which I understand, I think the big criticism is that it's very volatile. And so if you were trying to keep all of your money in it as your predominant store of value, you might run into, what was that?
I do that. It's stressful.
Yeah. And also if you're, trying to operate a business that way, that's a tough way to operate a business. So
you have to change your behavior and how you're spending and where you're thinking about things based on what the price is doing. But what's funny is that this is actually why the volatility of Bitcoin has decreased a lot, is the more people do that, the more it actually decreases the volatility, because you're more frugal when Bitcoin falls and you're trying to save more. And then when it goes up, that's when you offload some. So it diminishes the rockets and it diminishes the fall. It puts buying pressure when it's low. So this is why volatility, this feels like super volatile. No, volatility has decreased consistently across Bitcoin's lifespan. So this is low volatility.
Are you okay to handle some more topics? I don't want to take too much of your time, but I do have more stuff to ask if you're okay to go a little longer.
Well, I would say, so just on the point of John Dillon and the thing he was talking about there. First off, you're right. $10,000, we're going to take down Bitcoin, and that's the investment. Also, there were actually a number of people connected to government. MIT is connected to government. This was a community of cryptographers. The largest hirer of cryptographers is the NSA. Of course, there are people connected to government, and it comes from an email where John Dillon suggested, I work for the government, almost in this I'm important braggy sense, like from when I read it. That was kind of the sense that I got. But here's the thing is that he was talking with Peter Todd at the time, if I'm not mistaken, when that conversation was coming out. And then he goes on to just kind of like say a bunch of things that happened that didn't happen. There was no conversation of like, we're going to create propaganda to make small blocks the thing. Peter Todd wasn't like the holy, like, king of the narrative. Like, everybody was arguing about everything. Nobody could agree on shit. That's still the case in Bitcoin. Nobody can agree on fucking anything. Everybody's got like the worst possible opinion, and nobody could agree on it then. And the quote unquote propaganda was a whole bunch of completely discombobulated, unorganized shit show of people just screaming at each other because we were trying to make a huge decision about what the hell the future of Bitcoin was going to be. And nobody could even agree on the basics of how it works. Like, it was a fucking mess. And then he says that, oh, out of nowhere, they censor the online forums so that you couldn't talk about big blocks anymore. No, they quote unquote censored it. They did so to, which, by the way, Thamos, he says, oh, it was an anonymous person who you don't know who they are. You mean like fucking Satoshi? So like that's part of your argument. But Thamos was a dick. He was a super dick, and he did start to just like kick people out who were having this conversation, specifically because I didn't even agree with that. But the reason was very, very clear. It wasn't out of nowhere. It was because we've been fucking screaming at each other for 3 years and nobody could talk about anything else. And the conversation was now about a fork. And so they were saying that, oh, if you're going to just talk about forking Bitcoin off to some other thing, you're now talking about shitcoins, and shitcoins aren't allowed in our thing. And so what happened? Well, they went off and they made a completely different Reddit and a completely different forum. But you couldn't, he literally suggested, and he talked about this all at the exact same time during all of this, acted like nobody could get the information. Holy fucking God, nobody could get away from it. Nobody could get away from this fucking conversation. They tried to censor shit. They tried to moderate it. They tried to kick people out. And still, every fucking other post was about the goddamn block size war. It was the loudest, most infuriating, most incessant shit ever. Nobody was curious. If you were even touching Bitcoin, you're like, what the fuck is everybody arguing about? Because you could not get away from it. The idea that it was censored and you weren't allowed to talk about it is such an incredible like modification of history. It was literally because we were all fucking tired of it that started to finally happen. It wasn't out of nowhere. It was because it was clear we were never going to agree on shit. They were doing like the Satoshi Roundtable, and they would get together like the New York Agreement. And literally there's probably still audio out there. Jonathan Beer wrote a book called The Block Size War that I actually did the audiobook for, that does a fantastic job detailing out every single time. We were like constantly having meetings between like all the miners and developers and all this stuff. And everybody was like trying to make agreements, but you can't make agreements in a decentralized system. So like everybody was kind of like dropping the ball on their side, because it was like, you can't say, oh, users are going to do this or this software is going to be run. And every single time it was just screaming, like people were yelling and insulting each other. I think this was during the era that the famous quote happened of Jihan Wu, "Fuck your mother if you want to fuck." Like just people unbelievably angry, a million proposals, no consensus on shit. But you know what did have consensus? That there was no consensus, so it wasn't going to change. Because that's literally how Bitcoin works. And one of the big things is they said nodes don't matter, and that they would talk about like the dynamics of why it is that they were going to fork off and they were going to win. And all the conversations that I was having at the time, we talked about they literally don't understand why consensus is so strong towards not changing it, and they don't understand the role of nodes. And we literally talked about it like very game theory of like, okay, what happens when this fork comes along and they try to install, they try to do this other software? It's like, well, everything falls our way. They're going to lose because they literally don't understand how it works. And all we have to do is hold the line and make essentially run a client that says that if you do this, we're literally just going to disconnect from you. And we even explained out in the open, we're going to win because this is how the game theory falls. This is the economic incentive. We can just sell our Bitcoin Cash because you give us free fork coins that can get us more Bitcoin. And this is literally going to happen. He's like, that's not how it works. Nodes don't matter worth the shit. And then literally we executed a week before the user activated soft fork was supposed to go in, basically activate. They dropped the plans. They dropped the fork that they were going to do for SegWit 2x, and that's what forced a piece of the group to break off and fork to Bitcoin Cash. I was actually really excited about it. Honestly, I was like, this is great that they actually forked, because and I thought of it like a win for both of us. Because I was so sick of the argument. I was so sick of explaining this over and over and over again. But more importantly is that I could have been wrong. I absolutely could be wrong about how I thought about it. Now we actually get to have a market to decide which one is the more trustworthy, more sound path for a money that nobody can mess with and nobody can control. And so I even, for all the chaos that ensued, I would went up there and I was like, congrats guys. Like, this is actually cool. Bitcoin Cash is actually a cool name. And I call it Bcash, and Roger Furr got people would get super fucking mad about that. And I was like, Bcash is actually a cooler name. Bitcoin Cash is a mouthful, but whatever. But I saw it as a win, but they didn't win. So it's all just conspiracy, and it's all Epstein took over Bitcoin.
You're saying they're sore losers. It's basically, you got one big group and you decide, how do you want the currency to work?
I think
a portion of the portion of the group goes, we want it to work this way, and go, all right, well then you're a different network. We're not going to accept that change because we like the currency the way it is. So then they go their own way with their version of the currency. It becomes less popular, and then they're very upset because they think you guys keeping what your model was and it winning in the market reduce their opportunity, so they don't like to compete. Very unlibertarian. That's what I'm hearing.
Oh Jesus!
All right, so let's. I got two more things I want to cover, if that's okay with you. If you got a hard out, okay, great. So I want to state this comes from Mish Shedlock, I think it's Shedlock, who's got a great economics blog, mishtalk.com. I read it every day. I don't read every article in full. I don't always absorb everything he's saying, but he's a really smart guy, and he's got incredible coverage both on political topics and on economic topics. I did one episode, my second episode, when I was doing the Zero Hedge show with him. Cool guy, brilliant guy, agree with him on almost everything. There is a there's some old school libertarian financial guys who don't see Bitcoin. That would include Peter Schiff.
I was about to say, I love Peter Schiff, mad respect, but yeah, he's bad on Bitcoin.
That includes, I think it includes David Stockman, who's a personal favorite. I read every one of his articles. I've never actually spoken to him about Bitcoin, but just based off of random posts, I don't think he's a Bitcoin believer, and Mish is certainly not. So we're going to take on, I just want to say, in case he hears this, nothing but respect. We're allowed to disagree on some topics, and I'm giving it to you to kind of challenge some of his, I'm going to say, most recent.
You can blame it all on me.
I can blame it all on you. I'm just trying to be respectful.
I bet me and him probably agree on 99.9% of things outside. So,
Okay.
Take that with a grain of salt, right?
We're going to pull up two things. First is he's going to say one reason why I believe that this is one paragraph for why he thinks there was a Bitcoin came down recently. And then we're going to go through all of his points for why he doesn't think Bitcoin is a long-term sustainable asset. So, But first, we're going to start with this one paragraph. So, more supply. Wall Street has sought to capitalize on crypto's popularity by launching a growing array of exchange-traded funds and derivatives linked to Bitcoin and other popular tokens. Their proliferation might not affect the sheer number of Bitcoins, Ethers, and other tokens, but some investors thought their arrival has dented Bitcoin's appeal as a scarce asset. Bitcoin's main appeal has always been its limited supply of 21 million coins. By launching ETFs and complex derivatives, Wall Street has enabled investors to bet on the price of Bitcoin without need to buy or hold the actual coins, some analysts said. And then we can go into his key points. But just in terms of, I guess, addressing that first part, do you feel that the idea of Bitcoin or Bitcoin has been thwarted by the mainstream investors buying in. And I guess that there's, in a way, I guess, more supply because you can buy the ETF without buying the coin.
I would say that if that stops sound money from working, then what the fuck are we even? Why would we give a shit about gold or Bitcoin? Is it, if all it takes is like a derivatives market to pop up and like now the thing's under control and its scarcity doesn't matter? Like, what sound money? Please explain what sound money standard we are going to be on in which there is no derivatives market and there is no established financial interest. Like,
So
how
saying
are
it
you
could
going to be
still-
on anything standard in which those things don't exist? Like, that's kind of like the company's big and they try to have a hand in regulation. It's like, well, yeah, no shit.
Right. So just to state it a little bit differently, I think it's Gresham's law that good money chases out bad.
Gresham's. Yeah.
Yeah, Gresham's law. It's funny that I remember things, but I'm also half retarded and never get names right. But if money is kind of like Highlander, that there can only be one, and so as more people prefer one currency to another currency, they hold that currency, pushes out the bad currencies, and then the better currency continues to gain in value. And over a long enough timeline, people get sick of fiat currencies. So they actually opt into Bitcoin. Let's assume that Bitcoin beats out gold. And so it continues to be used in more financial transactions and goes up in value because there's more demand for it. So even if there's a derivative market that's built on top of that, it doesn't undermine that it could potentially be the best currency and the currency that's actually utilized. So the derivative market built off of the back of it doesn't actually undermine like if I understand it, it doesn't undermine like the core usage or the value proposition.
Technically, derivative markets should lower liquidity. In this instance, and in kind of the way our financial system works, because everything's driven by debt, it will probably actually have the effect of increasing. Did I say liquidity? I meant volatility. It would actually have the effect of increasing volatility. But that's exactly why when opening this, you asked me what was happening. Is a deleveraging. That's what derivatives are, is leveraging. I think we're going through a deleveraging because that's kind of exactly what happened. They're not going to beat Bitcoin or control Bitcoin by leveraging. They're probably going to get kicked in the nuts by leveraging Bitcoin, as has everything that has attempted to sell Bitcoin that doesn't exist so far in Bitcoin's history. It's very easy to sell fiat that doesn't exist. It's very easy to fractionally reserve dollars. You can do it for 100 years and not get called out on your bet. But what happens when every single time that's ever happened in Bitcoin, you last for about 5 months. That's kind of the average length of time before you're dead or you have to deleverage. And I also think that the opening of the IBIT and ETFs and all of this stuff, which funny enough, there are a lot of derivative markets and stuff, but they all mention the ETFs. You can actually look at the ETF addresses, like on chain. You can see exactly how much Bitcoin they have. They publish that. So the ETF itself, aside from people leveraging on it, like taking out loans to buy the ETF, it doesn't seem like the ETF itself is selling ETF that is not backed by Bitcoin from everything that I have seen. So
it's
you're just literally just talking about like there's financial tools on top of it. It's like, well, okay, yeah. So that's leverage. Also, ETFs and all this opening in a mainstream market, these are unbaptized Bitcoiners. Or this is like normal establishment people. This is people with like their retirement accounts. They're like, oh, Bitcoin's a fancy new thing. I'm gonna buy some ETF. They've never been through a fucking bear market. These are the weakest of weakest hands. You have to get baptized. You have to experience the 50% like blood curdling, what the fuck? Like the literal punch in the gut before you actually realize that you shouldn't just be buying and selling this thing like crazy unless you're a lunatic or you're a high frequency trader or you just want to argue with AI bots that are doing like 90.
Oh, I think either I froze or Guy froze. I'm gonna guess that Guy froze because I still see myself. Oh, there you're back.
We're back.
Maybe.
Okay.
Yeah, you're back.
So unless you want to trade against a bunch of bots and stuff, and you just think that's a really fun job, like super high stress, a job that you want to have, um, essentially everybody, you have to get your ass handed to you, and then sell after you see a bunch of big red candles, and then watch for the next 6 months or a year, Bitcoin go completely back, build itself back up, and go back to where you originally got in before you're like, oh, I'm an idiot. Like, you just have to go through that process. And Bitcoin is always going to punish the people who have weak hands. Bitcoin breeds like market chads, like people who like realize that this is stupid to care about the volatility in the 4-hour chart. Like, I need to be looking at this on 5 to 10 years. It is the traditional market. We just opened into the establishment market. The ones where if the S&P goes down 5%, they literally scream and beg for the government to print trillions of dollars to save the stock market, where they literally freeze trading. Bitcoin doesn't have that privilege. Bitcoin gets traded 24/7, and importantly, it's the broadest accessible market in the world.
By the way, I hate the 24/7 part, because when you're in panic mode, you don't get a break from it.
Yep. You can't go to sleep. Oh, Jesus Christ, don't go to sleep.
All right, so
it's the broadest market in the world. So, and everybody's still thinking in the US market, because everything in the dollar market really does just kind of rely on the fractional reserve banking system. Whole economies go through recessions if we stop issuing more debt, but that's not Bitcoin. Bitcoin also exists in North Korea. Bitcoin exists in Iran. Bitcoin exists in Syria. Bitcoin exists everywhere. Russia is buying, has a little stash of Bitcoin. And they've been talking about potentially doing energy deals with Bitcoin so they can get around sanctions. Bitcoin is everywhere. Just because some big established, they have a lot of liquidity and they do matter for short-term moves. But no, because there's a couple of ETFs and some derivatives. They don't just control Bitcoin now, and they don't just decide what the price is. I bet they would wish it would go up.
So let's go through the list just to give people the short summary. It's basically a question on the staying power of Bitcoin as the mining costs are going to become more expensive, which I guess also means transaction costs will ultimately go up. But let's read through the list, and then I'll let you take it on. 10 key points. The Bitcoin store of value trade has fundamentally broken in two. Unlike gold, which is mined with energy but then remains gold regardless of how much mining energy is expended, Bitcoin requires continual energy expenditure to maintain the Bitcoin network. Maintaining a digital ledger requires a constant injection of ordered energy. The miners are currently doing the same amount of work for 27% less revenue. They have billions in sunk capex, and as long as Bitcoin remains above the marginal cost of mining, 85K, they will keep mining. This in itself is nothing new. It has always been the case that mining has periods of unprofitability. The difference this time is that Bitcoin miners are no longer using surplus energy. AI data centers pay 3 to 4 times the revenue per kilowatt as Bitcoin mining and the miners are switching. Another halving in 2028 will reduce the revenue per hash by 50% unless the Bitcoin price increases by 100%. The passive bid has diminished for 2 years. The ETF complex provided a mindless price agnostic bid for Bitcoin. The tap has slowed radically, and now Bitcoin must find a new untapped bid. Absent endogenous cash flows, e.g. earnings, transaction fees, shares, dividends, Bitcoin has no stabilizing feedback loop, only reflexive ones. Further declines do not summon value buyers. They merely test the resilience of belief. Bitcoin requires a massive continuous calorie burn electricity just to prevent the network from collapsing. As energy prices rise thanks to AI and the exhaustion of the 2010 surplus, the cost to maintain your digital gold rises. Gold is chemically inert. It sits in a vault, and its maintenance cost is effectively zero and largely unaffected by existing value. So
okay.
I'll let you take it on.
I was really hoping that these points not only were something new, but that it wasn't just the mining death spiral. This has been like one of the biggest, most repeated things. Every time the price falls, mining death spiral, no security budget, blah, blah, blah. And so we've been through 3, 50, 25, 12 and a half, 6.25. So we've been through, we're on the fourth halving cycle here. And 3.125 Bitcoin per block. And every single time, every single time the halving was coming, that stat comes out. Bitcoin's going to fall. The profitability of miners is going to fall 50%. If it doesn't go up 100%, Bitcoin's dead. Well, Satoshi brilliantly put in something called the difficulty adjustment. If it becomes unprofitable, it gets easier to mine. If it becomes too profitable, it gets harder to mine. End of story.
Oh,
It's
so
like saying that
people overlook that the difficulty can come down, and that's part of like
it's literally how it works, and it's happened.
So there's always supposed to be
as many times as the difficulty has changed, which is every 2 weeks in Bitcoin. Like it's happened dozens. I mean, just it's happened that many times. It's happened literally that it's never stayed the same. Really,
so
it just always changes.
In kind of the perfect supply and demand of it, the difficulty of mining is exactly in line with keeping a stable amount of people interested in mining, and the more
a stable amount of people interested, and a stable prediction, a stable a probability on how long it'll take before the next block comes in and Bitcoin moves into the future again.
And then what happens when there's nothing left to mine? I mean, is there still as much of electricity demand to upkeep the network?
Well, so an interesting thing, especially in kind of the era of mining that we are in, he talks about like AI paying 3 to 4 times as much in energy. Well, consumers, just normal consumers in day to day, like a bunch of people think that like Bitcoin competes with like a household, and they'll be like, oh, mining is taking away 200 gigawatts of our energy because you can't run your stove. It's more expensive. It's a crock of shit. It's been like 10 years since mining was profitable on like a retail, like consumer electricity cost of like 11 cents per kilowatt hour. Like I think you have to have like sub 4 or 5 cent kilowatt hour to like really be profitable, like on net of just like burning energy to get hashes. Bitcoin has always been a buyer of last resort. And that's like the beautiful thing about it, is that it's shockingly easy to just pick up and go where there's cheaper energy. One of the big things that huge things that Bitcoin does, which makes it kind of revolutionary, is that it finds free energy. There's a gargantuan amount of totally lost energy, and it will buy stuff that's out in the middle of nowhere. I know there's a dude who capped a geyser in like Canada or something, and every time it goes off, it produces a ton of energy. It runs a turbine, and he mines Bitcoin with it. I have a friend who's literally out in the middle of fucking nowhere on a methane mine that literally can't produce enough to actually put it into a tank and deliver it somewhere without it being like 30 cents per kilowatt hour, like so expensive nobody's ever going to do anything with it. Hooked up a bunch of generators, and he's mining like three containers worth of miners out there. I am mining right now in my basement because it heats my house. It produces heat, and I get paid like 60% of my energy budget back in Bitcoin. I'm a net 40% loss, but I'm still mining because I want it warm in my house. And it's just better for me to get Bitcoin than not. Like mining has always been not profitable at like normal energy levels, but there is nothing that can use stranded energy like Bitcoin can. It can use, and shockingly, this is a crazy stat that I did not know until I started digging into the nature of like Bitcoin and energy. The LLNL did a stat basically on like mapping out the energy grid and how it works and lost energy and stuff. We actually, from generation to stove to TV, we actually only use a third of all of the energy produced. Another third is lost just in transmission, in converting and reamping the AC current, to heat loss in the lines, to just residual loss and bad connections and all of this stuff. But a full third, literally the exact same amount that the entire world uses in energy, is lost because it's produced at a time when nobody's using it. For no other reason.
So
which literally means
shocking amount of energy that could be used for Bitcoin
there's a
mining.
shocking amount of wasted energy. And the reason it can't be used is because it's not produced at a time that somebody needs it. It's produced in a place that there are not enough people to consume it. Or like a good example, renewable is a perfect example. Wind blowing, that doesn't mean that more people are watching Netflix because the wind's blowing harder.
Why is the market so stupid that someone hasn't tapped that energy supply for Bitcoin mining?
They have. They have. I talk to them every time I go to a conference. There's a new thing in the new company, and they're like, "Oh shit, dude! Did you know you get free energy?" Like one of the big things is tapping into solar farms before they actually go to market, because they start hooking up solar panels and they don't even have the infrastructure to go plug it into a city because they have to build $1 billion worth of wires. And somebody literally brings like 5 containers worth of miners and says, I'll pay you 2 cents per kilowatt hour for the shit that's going into the ground right now. I'll mine for the next year until you get your setup done, and then I'm going to go somewhere else and do it again. And they're like, hell yeah, that's a great deal. So investors are actually making money before they finish putting up all the solar panels and building a farm or building their hydro.
That job. That sounds like old school carny shit of rolling up with the caravan of miners.
Great.
Yeah, that's awesome.
So there's literally an industry around this problem, and it is brilliant the number of like companies and unique and like creative ideas that people have come up. I'm actually invested in one that's using an old methane mine, and they've got like 12 containers up and running, and I get paid Bitcoin every month.
There you go.
For
and it's on that topic,
$0 energy.
I can't remember the guy's name, but you introduced me to him, and I did a great episode of my Zero Hedge podcast, which was basically on third world countries tapping into unused energy sources for Bitcoin and how successful that was. I will have to link that into the episode description as well. All right. Last couple questions for you. Ooh, this one might be really loaded. I don't know if I got the. All right, maybe we can do a quick one on this.
Throw a loaded one my way.
No. It's more my own personal ability to sit down for an hour and 46 and absorb information than it is your ability to lay it out. All right. So we've got Warsh is the new Fed pick, and obviously Donald Trump wants lower interest rates. He might likely get his lower interest rates. Warsh, however, I guess academically believes that we can sustain lower interest rates, but the Fed also needs to engage in quantitative tightening. Now, for as much time as I spent trying to understand our money and banking and the way the Fed operates, I got to
do both of those at the same time.
What, lowering the interest rate and
lowering the interest rate and having quantitative tightening?
It sounds to me like you're gonna have more liquidity in the system. Anyway, I don't really understand it at all. And then this was a New York Post article. Besson says Fed will take its time on balance sheet moves, which I think is engaging in quantitative tightening. So maybe I'll just ask you a looser question. Yep. What do you think is kind of the next interest rate play by the Fed, and what do you think is going to be the outcome? And maybe give us just like a broad scope short answer.
Well, at some point they have to lower interest rates, and I think they're just kind of dancing around the fact that like, oh, they're going to pretend to tighten, and maybe they even try for a little while, but none of this is sustainable. They can't tighten this. Like it's ridiculous. Like, look, as Lynn Alden says, nothing stops this train. Like 10 years ago, the U.S. debt was $16 trillion in 2015. In 2005, the U.S. debt was about $8 trillion. In 1995, it was about $4 trillion. In 1985, it was, I think that's when it got up. That was the first tripling. But you go all the way back to like 70s, and every 10 years, it's doubled. It's doubled. We can't afford any of this. There's zero sustainable way that this occurs without just issuing a shit ton more debt. Best case for U.S. debt in 2035 is 80 trillion. Best case for 2045, 160 trillion. It's just going to. But all that stuff is going to get worse. We're actually accelerating. I think we'll probably be closer to 90 to 100 trillion in 2035. It beat me to 36, and 37 now. When I was
by
like
then
predicting.
the robots will be fully funded by Bitcoin, transacting with themselves, and we'll
There
all
you
be
go.
on UBI, and things will be fine. All
Yeah.
right, last question, and then I actually really got to go.
Yeah.
This was just in Twitter as one of the trending topics the other day, speculating on a Bitcoin strategic reserve. Do you see that happening? That either Donald Trump is so invested in Bitcoin he wants to prop up the price, so United States government is buying in, or that our currency becomes so devalued that they need a new strategic asset to pyramid off of, and I guess Bitcoin might be a better sell than gold. I'll just read this. My party speculated that Trump could take Bitcoin from Coinbase, Strategy, and BlackRock's, combining about 2.8 million Bitcoin with the existing 200,000 to 300,000 Bitcoin reserves from Caesars. This idea surfaced amid a Bitcoin price dropped below 67,000, erasing some post-election games. While Trump administration has supported crypto through a strategic reserve and dropped SEC lawsuits, critics called it unrealistic and risky, warning it could crash Bitcoin's value and face huge legal barriers. I don't know why government acquiring Bitcoin unless they forcibly seized it would lower the value.
Yeah, I don't know that.
But with no evidence of Trump backing the plan, do you think at some point there will be a Bitcoin strategic reserve, or the United States government looking to, I don't know, utilize it as a part of the backing of our, currency that supposedly still has gold under Fort Knox?
I mean, honestly, I think on a long enough timeline, everybody has a Bitcoin strategic reserve. Like Bitcoin, I believe, will be the new, transitions, like huge monetary transitions usually take on the order of like 30 years. Or at least it has historically in like the kind of last 200 to 300. The like very fundamental monetary transitions take about 50 to maybe 100 if you really take it back. But we live in technological age. I predict 25 to 30. But yeah, I think Bitcoin, everybody will have a Bitcoin reserve. Will they do it in the short term? No, I think they'll tiptoe. Like they're not in any rush. It doesn't make them look cool right now. Like, and that's what politicians just want to look like, the bee's knees, right? And we have a bunch of states, actually. There's like a handful of states. Texas, I think Florida has already enacted one. I think, which is the good Dakota? South Dakota has proposed it. I think it will start smaller. El Salvador has a Bitcoin reserve.
We don't really need two Dakotas. I feel like that could just be one Dakota.
We don't need
just
to take the good Dakota. They could just take over the other Dakota.
All right, Guy, you're the man. Thank you so much for doing it. One more time, let people know it's the Bitcoin Audible podcast. Everyone can go check it out. I have to send you that article. I got to go run and do something real quick, but I will have this episode up on all platforms later tonight. Give Guy Swann a follow, and I will email that article over your way so you can check it out.
Thanks, boss.
All right, later.
Man.
Thank you so much, man. This was awesome.